Greetings, everyone. It is September 10th, and we are about a week in front of what everyone believes to be a mortgage rate or mortgage rates finally coming down. And so, as we are kind of in front of this, what we believe is going to be a reduction in mortgage interest rates, I wanted to put up a video on 4 tips that I would suggest if you're thinking about purchasing a home. 4 tips to acquiring a mortgage when we're in front of a declining interest rate cycle. At least that's what we think we are. Who knows? We'll have to see where it turns out. I also posted this up on my podcast, Mosaic, The Stories of Real Estate. You can find it on Spotify, iTunes, where all podcasts are distributed. But I really want to talk about, because I'm hearing in the marketplace people saying, hey, I want to wait because interest rates are coming down, things of that nature. So I thought it might be good to put up a quick video, some suggestions on how maybe to approach mortgages when we're in the front of a declining interest rate market. So first and foremost, let me just start and say, hey, it's not a foregone conclusion that the Fed is going to cut rates. I personally would be shocked, and I think the market would be shocked if they didn't. But you know, that will come out on the 17th and the 18th as the Fed meetings close next week. And it's either going to be a 50 basis point cut or a 25 basis point cut from what we're hearing. And I want to make sure, just define what that is. A basis point, or BPS. 1 basis point is 1/100 of a percentage point. So 100 basis points would be 1%. So, you know, 50 basis points would be 0.5%. And I want to make sure everybody knows when the Fed cuts rate, they're not cutting mortgage rates. They're cutting the federal funds overnight rate, which is the cost of money banks borrow money overnight. And that is indirectly linked to mortgage-backed securities, which are mortgage bonds. And for the purposes of our conversation, when I say mortgage bonds, I'm talking about mortgage interest rates. So a couple words of caution. You know, let's say they do a 50 basis point cuts. Well, you're not going to see interest rates in mortgages decline by 0.5%. There's not a one-to-one direct correlation. And the other thing is, these cuts that we think are coming could be already priced into the mortgage interest rate marketplace or partially priced in. So we have to look at that and see kind of where it goes. We've got some labor and inflation numbers coming out this week, which will also influence the Fed on whether they do the 25 or 50 basis point cut. All right, let me get into my 4 tips on evaluating mortgage in front of a declining market if you're thinking about purchasing a home. First and foremost, and by the way, these can really actually work for refinances as well, but first and foremost, negotiate the terms and conditions including the purchase price of the home that you want to buy. The most important thing that you have to understand is buy the right house for your personal situation and then worry about the financing on it. But don't flip it around where you're timing the home that you want to buy based on what you may think is or is not going to happen with interest rates. Because look, something that most people don't know is almost every mortgage in the United States is refinanced or the house is sold by year 7 and 10 of the mortgage. So whatever you do right now, more than likely, you are going to refinance this loan. It's almost a statistical certainty. It's not quite, but it's close. So the most important thing when you're buying homes, get the right house. So negotiate the right house. That may be today, that may be tomorrow, that may be in a week, and we may have cuts coming up for the next cycles. Who knows? But what we do see is that prices in the real estate market are going up right now. So if you wait to try to time an interest rate, you may end up costing yourself more money, and you also may end up not getting exactly the house that you want that might be available now. Negotiate the terms and conditions, including the purchase price. Second part is, since we know we're going to refinance, regardless of what's happening in this rate cycle, just make sure you understand the refinance laws in the state that you live in. I'm not going to get too deep into this, but refinance laws in the state of Texas are very different than Colorado and Florida. So make sure that you understand. Just ask a loan originator, hey, what are the refinance laws? When can I refinance this loan for the particular loan program that you get? So at least you have that knowledge. Third thing, this is super important. You got to work with a qualified real estate agent. The reason is the real estate agents know the market, they know the home values, they know the relative value of the market, say today versus tomorrow. They have a pulse for what's happening, inventory, where it's at. They also have a good pulse if they can do seller concessions, like reducing the interest rate, buying down the interest rate, closing costs, reducing the price of the home. So you've got to work with a good real estate agent to make sure that you can go back into my point number one, is negotiate the terms of the house that's right for you. Super important to work with a qualified real estate agent. And the last of the 4 points that I'm going to bring up is, remember, interest rates are very, very important, but they're not as important as you think they are. And the reason for this is, if you really want to attack cost on a mortgage, and we do, you're going to focus on the term of the loan first. So a 30-year loan, FHA conventional conforming, is the most expensive loan you can get. It cash flows better because the term is so long, so your monthly payment can be lower, but the interest cost and the cost of the loan is higher because the loan is being amortized over a longer time. So we want to do 29-year loan, 28-year loans, 27-year loans if we can. The second most important part is the down payment. Put as much down payment on a home as you can and still sleep at night. So don't exhaust all your reserves, obviously. You got to have some emergency money, but use as much as you can that will allow you to sleep at night. So if you really focus on the term of the loan and the down payment, or maybe bringing a principal payment to the closing table if you're refinancing, you will attack the cost of that loan. The third thing is evaluate the right loan program, FHA, conventional conforming, non-QM, whatever it is. And the fourth is then really focus on that interest rate. But if you really attack a loan in that criteria, in that order, term, down payment, program, and interest rate, and then you get the house that you want, the best house for you. If you look at those 4 tips that I have, you will know that regardless of what happens with interest rates, you're going to really be in the right house, and you're going to be maximizing your opportunities to drive out cost. All right, there are my 4 tips. I hope they're helpful for you. Thanks again for watching my content. Certainly appreciate it. I always love to dialogue, so if you have questions, I'm licensed in Texas, Colorado, and Florida. Call me anytime at 720-419-3016. Thanks again for checking out my content, and have a great fall.